Imagine a healthcare company promising to revolutionize Medicare. With cutting-edge tech and a mission to genuinely help people, sounds too good to be true, right? Well, today, we're diving deep into Clover Health Investments, ticker CLOV. For months, it's been the whispered name on investor forums, a roller coaster ride of hope and despair. But is this the moment it finally breaks out, or is it destined to wither away? Stick around because by the end of this video, you'll know exactly what the charts and financials are screaming. So, what exactly is Clover Health? At its core, it's a Medicare Advantage insurer, but with a twist. Their secret weapon, the Clover Assistant. Think of it as an AI-powered co-pilot for doctors designed to proactively identify health risks, reduce costs, and ultimately deliver better patient outcomes. They operate across multiple states, offering various PPO and HMO plans. It's a bold vision, marry technology with healthcare to create a more efficient, patient-centric system. The question is, are they executing that vision? Let's get to the numbers that really matter. Clover just dropped their Q1 2025 results, and here's the headline: they're showing significant improvement. Medicare Advantage membership is up a whopping 30% year over year, hitting over 103,000 members. Total revenues, a fantastic $462 million, also up 33% from last year. And here's the kicker: their GAAP net loss shrunk dramatically to just $1 million, compared to a $19 million loss a year ago. They even hit positive adjusted EBITDA and adjusted net income for the quarter. That's huge for a company that's historically bled cash. But before you hit that buy button, let's zoom out. While Q1 was strong, this company has a history of losses. They are still guiding for full year 2025 profitability and adjusted EBITDA and adjusted net income, which is a massive step, but they're not fully GAAP profitable yet. They're projecting impressive insurance revenue growth for 2025, but the market is always watching cash flow and ultimate GAAP profitability. This is where the rubber meets the road. Can they maintain this momentum and achieve consistent profitability across the board? Beyond the numbers, what's actually happening on the ground? Clover's been busy. They recently announced the appointment of a new VP of Finance, a strategic move to bolster their financial leadership. They launched a new community pharmacy program in New Jersey, expanding their reach and services. And get this, their Clover Assistant technology is already showing tangible results, linked to better health outcomes for patients with congestive heart failure. Plus, they're set to join the prestigious Russell 3000 Index, a big vote of confidence from the broader market. The next major catalyst, their Q2 2025 earnings call on August 5th. Mark your calendars. Now, let's talk about the elephant in the room: competition. Clover Health isn't playing in a small pond. They're up against titans like United Healthcare, Humana, CVS Health, and Elevance Health, companies with massive market share and resources. So how does CLOV plan to survive, let alone thrive? Their differentiation lies squarely in that Clover Assistant technology. They believe their asset-light approach, focusing on technology to optimize care and reduce costs, gives them an edge. The goal is to grow membership efficiently and use their tech to keep medical costs low. But scaling this rapidly in a fiercely competitive market is no small feat. This is a battle for market share, and Clover is the nimble challenger. What are the pros saying? The consensus from analysts is currently a hold. The average one-year price target sits around $4.18, with a wide range indicating a lot of uncertainty. This suggests that while there's potential, analysts are largely taking a wait-and-see approach. And what about the short sellers? CLOV has a moderate short interest of about 10.7% of its float. This tells us there are still a good number of bears betting against the company, but the short borrow fee rate is low, suggesting less intense demand to short right now. This is a stock where market sentiment can shift fast. Alright, buckle up. This is where we look at what the market is actually doing with CLOV. The current price is hovering around $3.40, which is a significant move from its previous lows. Let's start with the daily chart. Looking at the daily candles, we can see CLOV has shown remarkable strength recently, moving upwards. We're observing a new uptrend establishing itself, with higher highs and higher lows. This recent surge suggests strong buying interest. Immediate short-term support appears to be forming around the $3 to $3.20 range. This is a crucial level to watch. On the upside, we see an immediate resistance level emerging around $3.50 to $3.60. A decisive break above this, especially accompanied by strong, sustained volume, would be a very bullish signal, indicating further upward momentum. The relative strength index RSI might show it's approaching overbought territory, so watch for any consolidation or slight pullbacks that could offer better entry points if you're bullish. Now, let's zoom out to the weekly chart for the bigger picture. This view provides crucial context. While the very long-term trend from its highs is still undeniably bearish, we are now seeing a powerful reversal pattern unfolding on the weekly timeframe. The recent surge above the $3 mark is significant. Previous major long-term resistance levels that the stock struggled with, possibly around $2.50 to $3, have now been convincingly broken. The next significant long-term resistance on the weekly chart might be in the $4 to $4.50 range, based on prior price action or moving averages if visible. The critical long-term support is now establishing itself around $2.80 to $3. Volume on this recent weekly surge is paramount. If it's strong, it confirms the buying pressure and the validity of this potential trend reversal. This breakout on the weekly chart is a very powerful signal, suggesting a shift in momentum for CLOV. So, what does this all mean for you? Potential buy signal. Confirmation of a decisive break and sustained close above $3.60 on the daily chart with strong, sustained volume. This would confirm the breakout from immediate resistance and indicate further upward movement. A successful retest of the $3.20 support zone after a slight pullback, presenting a lower risk entry. Strong, confirming Q2 earnings results due August 5th that beat expectations and reinforce their path to profitability. Entry point consideration: a clean breakout above $3.60 or a solid bounce off the $3.20 support if it pulls back. Stop loss: for risk management, consider placing a stop loss just below the key short-term support, perhaps around $2.90 to $3. Potential SELL: avoid signal, a sustained breakdown below the crucial $3 psychological level and short-term support of $2.80, $3 on the daily chart with increasing volume. This would indicate a failure of the current rally. Formation of lower highs and lower lows after this recent surge, suggesting the uptrend is losing steam. Disappointing Q2 earnings or negative news that threatens their profitability targets or membership growth. If you're holding, consider profit taking or reducing position if it approaches the $4.50 long-term resistance without breaking through convincingly, or if daily momentum indicators show clear divergence. Remember, this is not financial advice. Always do your own thorough research and consult a financial professional before making any investment decisions. Markets are unpredictable, and past performance is not indicative of future results. What do you think? Is CLOV a buy, sell, or hold for you? Let me know in the comments below. Don't forget to like this video, subscribe for more in-depth stock analysis, and hit that notification bell so you don't miss our next deep dive. Thanks for watching and happy investing!